Welcome back guys to Trade Pro FX. Today is another amazing video and we will only specifically be discussing about either how to identify majorly the valid order blocks and how you can take trades using it. So when you have your market select or you have already selected the market you want to analyze, like here I am at the volatility 25, so you will come and change your time frame to 4 hours. This is where most of the valid order blocks that are expected while trading are usually identified. You can also identify them in other time frames, but I normally trade using this. So the first thing I'll explain to you is how to identify order blocks. There are three types. According to me, there are three types that you can identify these order blocks. So the first one, let me take a drawing and illustrate to you very quickly how this order block structure or how it looks. So whenever you ever come and see a candlestick which is very long, and it has enclosed a bearish candlestick, that shows a direct significance that now the buying pressure has already entered that market. Drawing using these tools, it's a bit difficult, but I'll try my best to show you using a mobile phone how to trade or analyze using your mobile phone. That's why I'm trying to do it. So what I was talking about is that whenever you find a bullish candlestick which has engulfed a bearish candlestick and completely its body has crossed above, that shows a potential order block. So guys, always observe these candlesticks that show momentum and they are very long and they have enclosed a small or a certain bearish candlestick. So with that, now you will draw your deep order block from that candlestick which is bearish, and then we have other significance of knowing an order block. So like that one I've named it. Let me change this candlestick to color red so that someone who has not understood what I was talking about can understand. So let me change this to red in color so that you can understand what I'm talking about. So whenever you see such a candlestick pattern, that now red becomes the order block because it shows a full momentum to the uptrend. I hope we are together with that. Let me delete now everything and we go into the specific chart. So with that, now let's dive into the chart now. So like this, which is just here with us now, just look at that bearish candlestick below, which is way below. This is the first, the bullish candlestick, that one. So let me increase the font, the size of the px. So that's the bullish candlestick. Just look at how the formation of that bullish candlestick is. It shows you that it has completely engulfed this bearish candlestick. I hope you can all see. You can see, and that's why I'm using a mobile phone to illustrate to you maybe how you can use your mobile phone to analyze these charts and know the key levels. So this one is what I'm talking about. So that top wick of that bearish candlestick, and let's that place. So let me check for another horizontal lay and then mark the lowest point of that candlestick. So yes, so based on that, you can see now that candlestick has been completely engulfed by that next candlestick, which is the bullish candlestick, completely showing now we are now proceeding to an uptrend. That one, you see this one. So now there is a space in between. Now the next candlestick that formed, whether there is a space in between them. So you can see between the first, second, third, there is a space between the candlesticks. So let me draw it and you can see what I'm talking about. So you take your rectangular shape and you can see that in between that place and the next candlestick that formed, there is a gap, and that gap, that's what we call a fair value gap. That is what we call an inefficiency, and we know that the market will come back to that zone, fill that inefficiency, tap then you go tap that order block, then proceed to the uptrend. So basically, with that knowledge, we know that whenever you see an order block, you know that, and then check whether it's valid. And how do you confirm it's valid? You confirm whether it's valid by checking whether the next candlestick there is a gap, which is the fair value gap. And whenever you see that, we know I will wait for that market to tap that order block, and I take my trade to the up direction. Let's see whether the market went that direction. You can see it took a very long uptrend, and then that's it, guys. You can always trade using this strategy. First, analyze it on the 4 hours. If you are a swing trader, you can proceed just waiting as it is, and if you are a scalper, when you analyze on the 4 hours, proceed to the 15 minutes to check for entries. So using the same concept. So I will come back, check, and exactly see the concept I told you of the candlestick engulfing. Look, you can see a bearish candlestick and then a green bullish candlestick that closed very well, and that automatically signifies that that's an order block. So it doesn't need that qualifies to be an order block. As you can see, let me draw that bearish candlestick there. As you can see, that bearish candlestick, then you can see it broke. There is a break of structure above, so the market went back to tapped the order block and then went up, and then broke that BUS. So let me draw that BUS at this and show you what I'm talking about. So the market then proceeded up after it tapped again to the downside on that point. So you could have entered this using a very short trade after you have identified this, that now we have already tapped that, and you can see that. So that's our BUS, our break of structure. So whenever you are trading and you see now, looking at this, you can spot that there is a break of structure on these 4 hours. You can now go to the 14 or to the 15-hour candlestick and check whether you will identify a change of character. Because we are still moving to the uptrend, you can go to the 15 minutes, check whether you will see a change of character, and that's the entry point. So scroll to your left side and go to your where you have marked. Don't know whether it will show us that period of time, because now we are at a lower time frame on the 15 minutes. So let's just check. See, it seems the market has started updating. Maybe this month or the current month behind. So that's why maybe we are not spotting. So with that, see, the market has reached at that point. We cannot spot that area. We need, and Deriv needs to improve and give us the replay section. Anyways, so as we can see, the market the start of that 15 minutes has started on that place, meaning we cannot go behind unless we move to the 30 minutes or the 1 hour, but we wanted the 15 minutes, so I'll just return to the 4 hours. So I hope you have just understood. I was talking for the maybe you have analyzed and you want to take trades on the current time period. So we can proceed and see how the market went. So after identifying that order block, we expect that the market came back and touched that order block and then went up. So let's see what happened. And closely the market came closely to that point and then went up. So moving to the up, there is this section I want you guys to look at. You can see it created another order block there. So let's draw it. You can see the candlestick the green candlestick and crossed that bearish candlestick, and then I see there was a small inefficiency there. So let me draw it, that bearish candlestick. So at that point, then let's draw. So you can see that enclosed and shows a certain form like an order block, and then let's confirm whether there was a small inefficiency, a fair value gap. It is very, very small. So you can leave that one and wait for another. You can check for another valid complete valid order block which shows an inefficiency and a candlestick. So you see the market has stayed without coming back to that point, but we can spot now this order block which shows a very good point. So you see at that point, and then we have a very good inefficiency or fair value gap between the first, the second and the third momentum candlestick. We see there is a very good candlestick. There is a fair value gap which is very smart, showing that's a very valid order block. So that's a very valid order block because of that efficiency. So that inefficiency, the market, let's push that rectangle. So the market came back to that zone and tapped that zone, and you can see it came back, tapped that zone, went straight up and then broke the structure. Now change of character to the downtrend. So from there now we are now moving to the downtrend. So you can now start identifying now these zones, the order block, checking on those blocks that are now showing a downtrend, because we have already broken that structure, the change of character. You can see there is an inefficiency there, and then when the market came back, tapped that area, and you can see we will just move to this rectangle. You can see the market. Let me move. I hope the market will come back, touch that order block on the top there. So that's our aim now, because we have already changed the character now to the downtrend. We are now moving down. So you can spot when the market reached that point, it went drastically down. And that's it, guys. That's the way we identify valid order blocks, by checking whether they have been followed by inefficiencies or fair value gaps. So in case you have not understood, kindly comment below. I will answer any question you have. So with that, have a nice time while trading using these strategies of order blocks and identifying valid order blocks. Have a nice day, and let's meet in the next video.